So we remain very bullish because right now we're getting assaulted by some trade tape bombs and a tightening Fed, but it's not really the driver in where we see the market going by year end. That's really tax reform. The benefits of tax reform are absolutely powerful. We're seeing increased CapEx, more jobs growth, absolute shortages in trucking, in rail car loadings, and the underlying economy is exceptionally strong right now, leading to higher earnings. So we see the stocks moving higher by year end.
How much of that do you think is already in the market, right? That's a critical question, right?
Absolutely none, because here's why.
None?
The market on December 22nd, when Trump signed tax reform, was right around 2,700. So we're actually still at those levels right now. So investors can still buy stocks today, and they're not paying up for tax reform. So all this trade tensions, the tightening Fed is really dominating the news cycle when, in fact, tax reform is going to be very powerful and have a lingering effect.
Yeah, what if trade gets a little worse from here?
It's a problem. Look,
what if the Fed continues to raise rates from here?
We like the Fed normalizing. We think a normalized central bank policy is important. Trade and the tariff regime is terrible, but it's dwarfed by the benefits of tax reform.
Yeah. Pete?
You know, I just feel like we're in this rotation, right? And we've talked about this time and time again, and now it's sort of the summer pause. I mean, if you look at the volatility, Scott, I mean, that sort of speaks for it all. We've seen volumes drop from where they were, and I'm talking specifically in the options, the derivatives markets. We've been averaging about 21.5 million per day, and now all of a sudden we get into June, this latter part of June, and now here we are at about 19 million a day. We actually saw a little bit bump back up yesterday.
So you telling me, you use the word summer pause. You think we're having a summer pause?
Summer pause,
Forget the summer sizzle? I mean, this is the way it's going to be.
And not a negative. And I will point out one other thing, because you keep pointing out the Buffett thing, and you've done it several days, and I agree with you.
Because look, if you look at the data from that day,
Sure.
right, that happened at night,
right,
the close of that day, and the market went on a run.
Absolutely. And take a look at, everybody loves to come on here and say, hey, you know what, the market can't go up without Apple. Well, Apple hit 194, and now here it is in the 180s. So the fact that it's moving up and the NASDAQ continues to be the outperformer each and every day, I don't necessarily view that as a negative thing, Scott, but especially because of the fact that we're really just sort of grinding and people are trying to figure out positions. And to your point, Mr. Saperstein, the idea that things are underneath the idea of Mr. Trump and some of the decisions that are made in terms of these tariffs. I mean, this is really the reason why I don't think we're much higher. If those weren't there right now, this market would be much higher.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.